Price is not trending here. It is negotiating structure. And that distinction defines everything that follows. The March 18th U.S. session did not simply move lower. It relocated through multiple layers of prior structure. The session anchor formed near the lower region of the March 15th Asia session. This is already a weak starting position, because it is not outside prior structure. It is inside it. From there, price moved lower. It broke below the March 18th U.S. session box. It also broke below the lower boundary of the March 15th Asia session. And then it reached the upper boundary of the March 12th U.S. session. This sequence matters because it shows progression through structure, not expansion into new territory. Every movement was interacting with an existing boundary. Now this is where most misinterpret the chart. They see downward movement and assume trend. But trend requires clean distance, and distance requires holding beyond structure. That did not happen. Instead, price reached the March 12th U.S. boundary and stopped. Now the March 18th Asia session begins, and it forms directly on that same boundary. This is critical, because when a new session forms on a prior boundary, it does not confirm continuation. It creates a decision point. Initially, price stayed inside the Asia session box, but then it broke lower. It moved below the March 12th U.S. structure and extended toward the mid-region of the March 9th U.S. session. Now again, this looks like continuation, but structure tells a different story. This is not expansion. This is relocation into older structure. Now we begin to see the first shift in behavior. Price stops extending and begins to stabilize. Now the March 19th U.S. session forms, and its anchor is placed between the mid-region of the March 9th U.S. session and the mid-region of the March 12th U.S. session. This is not a breakout position. This is a balancing position. And balancing positions do not produce trend. They produce negotiation. Price moved higher from there, but it did not break cleanly beyond structure. It tested the upper boundary of the March 12th U.S. session and stopped again. So now we have multiple sessions forming inside the same region. March 18th Asia, March 19th U.S., March 19th Asia, all interacting with the March 12th structure. This is compression, not expansion. Now we bring in the first two axes of MRM. Time is defining where anchors are forming, and those anchors are overlapping. Volatility is beginning to contract after expansion, and that contraction is happening inside the same structural range. This is the key condition. When sessions overlap and volatility contracts at the same time, the environment shifts from directional to rotational. That is what is happening here. And if you do not identify this correctly, you will continue to trade as if this is trend. And that leads to repeated failure. Now we move from structure to execution, because understanding structure without execution does not improve results. Execution must adapt to the environment. And the current environment is defined by compression between session boundaries. Let us define the key locations first. The March 12th U.S. session boundary is acting as an upper structural limit. The March 9th U.S. session mid-region is acting as a lower reference. And the current sessions are forming between these two areas. This creates a range of negotiation. Now inside this range, price behavior changes. Moves become shorter. Reactions become faster. And continuation fails more often. This is not random. This is structural density. When multiple session anchors form in the same region, interaction frequency increases. And when interaction frequency increases, usable distance decreases. Now let us connect this to execution. When price approaches the upper boundary of the March 12th U.S. session and fails to hold above it, that location becomes a rejection zone. Not because it is resistance in a traditional sense, but because structure has already rejected continuation there. So execution shifts. Instead of buying breakouts, you wait for failure at the boundary. If price reaches that boundary and fails again, then short execution becomes valid. Now consider the opposite. If price approaches the lower region near the March 9th U.S. session mid-area and begins to stabilize, that becomes a support interaction. Again, not as a static level, but as a structural zone. If price holds there and begins to move higher, that creates a rotation back toward the upper boundary. This is range-based execution. Now we bring in the third axis. Location. Where is price relative to moving averages and bands? During the March 19th U.S. session, price moved back toward the middle of the Bollinger structure. This indicates neutral positioning, not strong trend. Now the fourth axis. Pressure. During the U.S. session, the upper Bollinger Band maintained a downward slope. The lower band flattened. This shows that downward pressure was losing strength, but upward pressure was not yet established. Now, during the Asia session, the upper band stopped declining and slightly turned upward, while the lower band remained flat. This is a transition in pressure, not confirmation of trend. Now the fifth axis. Liquidity. Liquidity does not activate in the middle of the range. It activates at boundaries. So if you are executing trades inside the middle of this structure, you are trading noise. Execution must occur at edges. Upper boundary rejection or lower boundary stabilization. That is where decisions become clear. So the execution framework becomes simple. At upper boundary, wait for failure, then short. At lower boundary, wait for stabilization, then long. Inside the range, reduce size and expectation. This is not opinion. This is structure-based execution. Now we define what happens next. Because structure is not static. It is continuously evolving through interaction. The March 19th Asia session is now forming inside the March 12th U.S. session box, and it is doing so in a compressed and overlapping manner. This is a clear signal of continued compression. Now compression always resolves, but the direction of resolution is not predetermined. It is defined by which side establishes persistence first. So we define the two conditions. First condition. Price breaks above the March 12th U.S. session boundary and holds. Not touches, not briefly moves above, but holds. If that happens, interaction frequency will decrease, and distance will begin to expand. This creates expansion. In that case, execution shifts from short-range rotation to directional continuation. Second condition. Price fails again at the upper boundary and returns lower. If that happens, compression remains active, and the range continues. In that case, execution remains boundary-based. Now there is a third possibility. Price breaks below the lower boundary near the March 9th U.S. session mid-region and holds. If that occurs, then the entire structure shifts lower, and the previous range becomes overhead resistance. So now we have three clear structural outcomes. Upward persistence, continued compression, downward relocation. Each outcome defines a different execution style. And this is where most traders fail. They apply one execution style to all environments. But structure requires adaptation. Now let us bring all five axes together. Time shows overlapping sessions. Volatility shows contraction after expansion. Location shows price inside a defined range. Pressure shows a transition from downward to neutral. Liquidity shows activation only at boundaries. All five axes align to the same conclusion. This is not a trending environment. This is a negotiating environment. So the correct question is not where price will go. The correct question is where price will hold, because the side that holds defines the next phase. Until that happens, structure remains dominant, and execution must remain conditional, not reactive.